Wells Fargo line of credit freeze. Hey gang, this is Mike with MrNoFluff.com, and today I'm going to talk about exactly what does it mean for the economy that one of the biggest banks in America, or I should say in the world, Wells Fargo, is stopping its personal line of credit. In other words, they're putting a freeze on everyone's account. It doesn't matter if they have great credit, excellent credit, they're bad payers or great payers. They're just saying stop. So without any further delay, let's dive in. But before we do, if you can hit the like button, leave me a comment below. It definitely helps out with the algorithm, and I appreciate the support. So the very first idea I want you to ponder about it relates to being a real estate investor, since this channel is about real estate. One of the first things that I saw when I saw Wells Fargo saying that they're stopping their line of credit, I was jumping up and down for happiness, for opportunity, for joy. Now it depends where you're sitting. If you are a borrower, you live on credit, then you're very sad about that. But if you're someone like me, that you like to use creativity and imagination, you don't like bankers, you don't like debt, then you're really happy about that. Why am I so happy when I heard that? Is because in this upcoming real estate crash, in this upcoming housing bubble burst, there's not going to be money around for all these, what I call wannabe investors that just borrow money to be their dreams, right? They just have personal lines of credit, and they may have, Halo home equity loans. They may have business line of credit, whatever this is. All that stuff is going to get dried up. Okay, that's what it symbolizes to me. That in this upcoming crash, you got to have cash or you got to have creativity. And that's what I teach at my real estate dojo is creativity, how to do deals where the homeowner becomes your private bank. So anyways, that just symbolizes to me the very first thing is that this upcoming crash, there's not going to be fake money out there, easy money out there. There's not going to just give money to everyone. And all these real estate investors that rely on credit, they're not going to have the credit to buy property, which means they're going to be eliminated. They're going to have to sit on the sidelines for only cash players or people that know how to do what I teach at my academy, how to work with owners direct. Doesn't matter if you're doing commercial, residential, and let the owner, the motivated seller, become that investor's private bank. So I'm like super stoked about that. Right now, it's starting with the personal lines of credit. Now, one thing to also think about, which is my second point, is that, personal line of credit is not like real estate mortgage, where majority of the loans that are made in America are backed by the government. They're FHA loans, okay? So personal credit is not backed by anything. It's not even a secure loan. That's why it's one of the riskiest loans out there, right? Because the banks don't get a collateral, right? They just are giving you the loan, just because for whatever reason, your FICO score or whatever the story may be, and they don't have a collateral. So it's one of the riskiest loans out there, and it shows that they're lending with the mortgages because Big Brother's going to insure them. They insure that. Freddie Mac and Fannie Mae, they insure these loans. So either way, the bank gets paid if the borrower pays or if the borrower doesn't pay. So now you can you can still get mortgages, but understand that banks are taking no risk, very little risk when they are doing mortgages, especially when they're chopping it up, selling it on the secondary market in mortgage securities, mortgage-backed securities. Okay, so now another thing that I want to show is that the Wells Fargo line of credit freeze, they stop. It signifies that there's hard times coming ahead. Okay, again, there's hard times coming ahead. Now we know that the banks, especially Wells Fargo, they're one of the insiders. They're part of uh, the central bankers member banks, so they're getting this free money. But they know what's coming because they have the books on millions of people debt from auto debt. They're probably seeing that a lot of people are going behind on their cards. Why do I say that? Personally, I've seen so many repos in this last month. As I even mentioned to my wife, as I look, dude, there's so many people getting their cars repoed. Okay, so the banks have their cards of all these debtors, and they're seeing that a lot of people are defaulting in their auto loans. Okay, because repos are happening left and right. Okay, then they're seeing the mortgages. They see all these millions of people that are behind in their house mortgages, right? But that's not a problem for them because why? Because they're backed by FHA. So they're not too worried about that at this point because the government or me and you're going to take care of that. Then they're seeing all these people that have credit cards, right? And again, they're probably seeing defaults going up, bankruptcies going up, okay? Then we have, personal credit, right? Which the banks are probably seeing massive defaults. And then we have home equity loans, and we have all these instruments that the bankers create to get people in debt more and more and more, right? And they have different interest rates and so on. So the bankers, like in this case, Wells Fargo, it's sitting really high at the top of the mountain. They're seeing what's coming. They're seeing that bad weather coming through. Plus, they have all this insider information because they have this book of records of all these people that are indebted to them, and they're seeing defaults in all different chapters of debt reduction, right? You have auto, you have home equity, reverse mortgage, all that stuff, right? And so they're getting to see that, and they're saying, well, I'm going to stop the lending because this is the least secure way. That's the least secure way for them to make money, and they're going to get haircuts in these situations, and that's why they're doing this. Now, the other thing is that all through history, if you look at recessions and depressions, there's always a freeze. There's always a tightening of lending from banks because they're going belly up. They made too many bad loans, or there are derivatives, or whatever the story may be. So there's always a contraction. For example, 2006 fourth quarter, I saw the real estate market is going to tank. And a couple of years later, it did. So, at that time, I had my business. I was lucky enough to come to America as a refugee, start a business with $100. At that time, I was 7 years into it, and I'm making a lot of money. I'm making $100,000 a month in my business. Plus, I don't have any debt. I own the business clear and clear. I'm doing moves left and right, but I see the crash coming. So I have money in the side. I have excellent credit. I have a business that's making over $1 million a year. It is debt free. And then I went to banks to borrow money at that time because at that time I still didn't like banks, but I knew that in this crash I could pick up a lot of properties. No matter how many banks doors that I knocked, I had all this perfect documentation from business, uh, tax files to bank statements to great credit to a lot of cash in the bank. I couldn't borrow any money. That's how I got into what I'm sharing with you today of doing deals with homeowners direct because there was no option. And then I came to realize that anytime there's a crash, the bankers don't want people to get rich. That's why they contract, right? Like seriously, the best time to be an investor is in the crash. Literally, not when the thing is pumping. Now, a lot of people have it twisted. When the thing's going up, they want to jump into it. But a real way to make a lot of money, especially in America or any other part of the world, is to buy when it's not hype, to buy when no one likes it, to buy when the thing is on fire, it's like coming down. So 2006, 2007, 2008, 2009, the markets were coming down. They were burning, and I knew that was the best time to get into the market. And I had some cash lined up, excellent credit, a lot of cash flow, no debt, like literally no debt, no card payments, no business. I don't believe in debt. So the banks wouldn't give me money, and that's why I got into creating deals with the homeowners direct because I realized that the banks don't want the average Joe like myself to get ahead when there is a crash. They want themselves and their buddies to pick up all the wealth in America. And that's why when there's a crash, there's usually lending is constricted. They don't want people to get ahead. But when the economy is booming, when prices are going up like crazy, they know that whoever borrows this money to buy a home, they're going to be underwater. Then they're giving out the money like left and right. Okay. Again, why are they doing that? Because FHA, we take care of those loans. They're guaranteed by the people or Big Brother. So we have to think about that. That Wells Fargo sees the
Forget
thunderstorm
everybody,
coming.
just
They
keep going.
see the bad weather coming. They have the insider booklet of all the debt producers, their customers, and
I
into
think
the
that's
fault,
that other
in what
bridge we need to
section they're
take, but I'm not
defaulting in.
sure
And
100%.
they
Let's
realize
follow
this
me.
is a high risk, and so they're bracing for impact. It's kind of like if someone's about to punch you in the face and you see it coming, you're gonna probably close your eyes and move your hands up, right? And so they see it coming, and that's the first knee reaction, knee-jerk reaction, guys. Is hey, they're gonna brace for impact, and I think more is going to come. Not only Wells Fargo, but a lot more different banks. The other thing to think about is, that how much trouble is Wells Fargo in? We just seen them pay a lot of money for creating fraudulent accounts. They have millions and millions of borrowers on, real estate that are behind in forbearance programs. They do a lot of autos. Like I explained to you guys, there's a lot of repo going on in the autos. They do credit cards, they do personal lines of credit. So they have all this stuff out there, and I think the company's just in trouble. This is my speculation. I don't have an insider report or anything like that. And this all everything I'm saying is not financial advice. It's my personal opinion. But I think the company's in trouble. And kind of like when two people are fighting, right? Two bankers are in the ring fighting. The ones that's kind of like backing off, it's probably they got hurt, right? They don't have the energy. They're already getting hurt, and the hard time hasn't even hit like fully hot. So, probably Wells Fargo's in trouble. Probably they know that hard times are about to hit America. Probably they know there's going to be millions and millions of losses in all sectors of their books, from auto loans to personal lines of credit to home equity loans to mortgages to you name it, guys, right? And so they're just trying to do the best they can. And, sure, there are going to be people that are going to hate on them and say, hey, why are you cutting the money out? Right? But there are people like me that are
Thank you.
happy because now this levels the playing field. When this next crash, when the housing market crashes, there's going to be less investors on the street with buying properties with money they don't have. That's excellent because that leaves more inventory. And when there's more inventory and less buyers, that's just going to push the prices down and down and down. That's just going to push motivation more and more. And it depends on who you are. If you're the homeowner, then of course you don't want this, right? You don't want your equities to evaporate. You don't want your home equities to go negative or break. You don't want that. And I totally agree with that. But on the other side, if you're an investor, then like my real estate investor like myself, then the depression is the best time to make moves. A lot of times I don't do deals when the market is good because it's just a waste of time. I rather do deals when there's a fire and I only have to work so little and get so many deals versus when the market is so good. I got to work so hard to get a lot of deals, but I got to work harder. And I'm kind of lazy, guys. I love to spend time with my family, take them to the park or ride bikes. So I rather just only I guess a seasoned lion, a seasoned hunter. I know when the season is, and when the season is on, I'm up, ready to make it happen. When the season is off, I'm just enjoying life because I realize that life is cyclical. We live in a world of duality. Today the market is up. Tomorrow the market is going to be down. It doesn't matter if you're talking about Bitcoin, if you're talking about real estate, if you're talking about gold, and even powers of life. One day you're young, next day you're old. So as long as you understand that we live in a world of duality, and whenever the pendulum swings one way, it will always swing the other way. And that's I just roll with the laws of nature. I'm not smart. I'm just an average refugee that came to America. But I've been right on many different things, from calling gold in 2016 to calling that we're going to have the subject to heaven of real estate back in 2016, which we're seeing. I called it on gas prices shooting up. I mean, there's so many things that I've called, guys, and I'm not special. I don't read charts. Actually, I just close my eyes and I meditate, guys. And all the information is out there in the ether. Only if you're willing to just hush your brain, it comes to you. I don't think you have to go to school or college or read books to get it. The information is out there for everyone. We live in a world of abundance, right? From one seed, we could have millions of apple trees, right? And those millions that we have millions and trillions of apples. So all this information is out there. It's just some people like to look at charts, some people like to do this, some people like to do that. And I don't listen the way I get my information. I listen to my gut feeling. I listen to my instinct. I close my eyes and the ideas just flash into my head. It flashed into my head to buy gold when it was $1,100 and I knew going to go up to hit all-time high to hit the 1900 bucks. And now we're back at it again. In 2016 or 2006, I should say, fourth quarter, I know the real estate was going to crash, and I got into real estate when no one thought it was going to, be great when the market had tanked down. So all through this is I'm just doing this video, just giving my opinions. I think that this is a good tell that Wells Fargo is telling us what's happening. And a lot of people have been patient, like myself, just sitting on the sideline, waiting for the action to happen. I know there are a lot of stock investors that have been patient, that have trash on the side to dive in. Same thing with all markets. I never chase the high. I like to buy in when no one thinks it's cool. When everyone's going right, I want to go left. Anyways, guys, thanks for watching this video. Great times if you're a real estate investor coming up. I'd like to hear your thoughts and comments below. If you like to find deals in your backyard, working with homeowners direct, creating subject to deals, creating owner financing, creating where the seller becomes your private bank, I highly recommend joining my academy at academy.mrnofluff.com. There's monthly coaching. I give you access to my best-selling courses, and I help you do your first deal or get your rental property or do your fix and flip or do your first wholesaling, whatever the story is. I'm there to help you, and I'll see you in our meetings. Peace.